Okay guys, Saturday the 13th of January, and we're going to look at the US indexes, the S&P 500 and the NASDAQ. So as always, we will start on the S&P. We'll have a quick look at the market in relation to last week's analysis, and then we'll have a look at the market for the trading week ahead. So the first thing is, I hope you all had a good first week back at the charts. And if we're looking at the S&P, first of all, I think the best way to describe this market is to say it has gone absolutely mad. This bullish rally is just continuing. It's up really from the lows just before New Year, over 120 points, which is a huge move for the S&P 500. Now, last week, we were basically looking at potential pullback areas for continuation, for bullish continuation. The market didn't really pull back at all. It just continued on with its very, very strong upward surge. Now, this week is relatively similar to last week in that when you look at markets, you kind of hear people saying you don't want to try and catch a falling knife. So basically, you don't want to try and buy the bottoms of downward trends, and then for upward trends, what I say basically is you don't want to stand in front of a moving train, because trying to pick the top, it's very, very difficult. There's no real way to tell when you're at all-time highs. I mean, when you're at all-time highs like this, there's no way to really tell when the market is going to give up and move for that correction. However, when the correction starts on the S&P now, just because we've had such a very, very strong bullish surge here, I'm expecting it to be relatively large. Potentially all the way back down toward 2,700 when we see this correction coming in, depending on how much further we go up. So coming into this week, what are we looking at? Okay, so let's just add in this right here. So what we can see is as the market was moving up, we came down and gave a couple of tests here, which has confirmed really the small trend line, very, very minor trend line. Let's get rid of this one for the moment. A very, very minor trend line, but we did test on Wednesday and it did spur the next bullish wave up. Now, we're coming up towards the level 2800. Let me just turn this to black so it's easier to see. So round numbers on markets are always areas worthwhile looking for potential support and resistance. They're just psychological levels where people look to take profits or place orders. So coming up into 2800, it is worthwhile looking for potential reactions, potential weakness in this market, and the sellers stepping in. Now also, it's not the exact level 2800. You want to give it the cushion like this. Slightly above, slightly below, sort of create yourself the trading zone like this. Support and resistance is very, very rarely an exact point on a chart, but the 2800 level, it is definitely worthwhile keeping your eye on. Now, down below, we're all the way back down toward 2760. Now we have basically the high of this candle, low of this candle up in Thursday and Friday, but for me personally, when I'm day trading, that is not enough evidence. I would not trade off of that as a level. If we just close this and then look at the 4-hour time frame. Okay, so what you can see is right here where the rectangle is on the chart. We've had a little bit of pausing price action, the spike down on the Friday and then the move back up. For me, that is not strong enough. It's when we start getting back down into proper levels of structure where we can see where the buyers and sellers have been battling out. Those are the areas I'm interested in for potential pullbacks. So up above, it's 2800. Down below, it's when we start getting back into these levels of structure. It's actually, I suppose you could say it's a little bit easier picking out support and resistance when you are at all-time highs, because there's a lot less to work with. So it's less likely that you're going to make mistakes. If we start coming into levels like this, it's a lot more choppy. You could be picking your levels here, but then if you look left, you could say, well, it doesn't line up perfectly with what I'm seeing to the left. It can become a little bit confusing, especially for beginners. However, this whole section is a level of potential support, as is the level down below. So the level up above is around about 2750 to 2760, then around about 2742, down toward 2735 right here. So pullbacks into these levels, especially if we're lining up with this small trend line, good to look for potential bullish continuation. Now, if we start to break down below this level next week, it could potentially be an early warning sign that a stronger correction is looking to come into the S&P. Now, we still have the level of support down below, 2742, 2735. However, if we've seen the break below this level, I'd also be happy to look for potential resistance up here. And then if we start to break down below this level, I'd be more than happy to look for the potential weakness and then the potential continuation, potentially, as I've mentioned, all the way down toward 2700. Doesn't mean that's going to happen, but it means it's looking at the price action. It's definitely worthwhile starting to look for the weakness, because basically what we'd be seeing is a very strong surge up, the market pausing, giving us a little bit of structure, and then another surge up. So if we are pulling back once again, it's very likely that the buyers are going to be watching at this area. So basically the people who have missed out on this wave up, not only the people who have missed out on the wave up, the people who take profits up here, let's say 2800, as it comes back down again, they want to get back in the market and try and join in that bullish trend once again. So if we start to see failures here, it's likely suggesting that the buyers are sitting on their hands a little bit more. They're starting to think, you know, the market has made such a strong bullish rally, I want to wait for a little bit more value before I get back into the market. And for those reasons, if we're breaking down below, it's worthwhile looking for these sell positions, with the next key structure being down toward 2700. So what you can see is the round number 2700 right here, as we're looking at 2800 right here. This is why it's good to have a little bit of a cushion, because if you'd just been looking at 2700 here, you would have missed all of this. However, if you just give it a little bit of cushion, then it's very likely you're going to see some sort of a reaction on the market. Okay guys, so those are the main things I'm looking at. Another little thing that you could keep on your radar is, because we've been moving up so strongly like this, the lows of the previous strong bullish candles. It's likely people who are buying into this market, their stops are going to be coming up, not right at, but just below the lows of each of these very strong candles. So if we do start to break down below them, during the intraday, during the trading day, the sort of areas that I would be watching for, if we start to break down below the lows of strong candles like this, I'd be happy to look for resistance, and then smaller movements down as stops are triggered, as people close out positions. Okay guys, that's everything for the S&P, so let's move on to the NASDAQ. Okay guys, now let's do the exact same thing for the NASDAQ. So this market has continued also on its bullish upward trend. Now the only difference with the NASDAQ is we had our upper band of trend line. So on the Monday we pressed up into it, Tuesday we had the reaction with the doji candle, Wednesday we continued in the sell-off, Thursday pressed all the way back up into it, and then Friday we've at least attempted to start the break through this area. Now similar to the S&P also, whilst it's in this very strong upward trend, there's no real way to tell how long it's going to continue. However, like the S&P, when the correction comes, it's likely going to be a relatively strong one, potentially all the way back down toward 6530, or even all the way back down to key levels at 6430. So for next week, now we also have the round number up above on this market. This one is 6,800. Always worthwhile having on your chart, especially when you don't have any other price action evidence. So again, we're just putting the cushion around the 6,800 level. If we press up into this, what we could potentially see, doesn't mean this is going to happen, I'm just saying what we could potentially be seeing is the false break up, the test, and then the bearish move back down in between the channel that we have on our chart. So it's always worthwhile looking up at 6,800. We'd really need to see a nice clean break above this level before I'd be happy to then look for the pullbacks. And really at the trend line, lining up with 6,800 would be my preference for the continuation up toward 6,850 and potentially 6,900. Now, down below, we still have relatively small levels of structure. So the spike up on Tuesday is lining up with the spike down on the Friday. And really I'd take this down toward at least 6,670 right here. If we do see the pullbacks, worthwhile looking for a continuation of that bullish trend. Down below we have a level at 6,660 down toward 6,640 right here. Again, if we see the pullbacks, worthwhile looking for the bullish continuation. Now down below we have the spike down from Wednesday the 10th of January. However, I'm going to make that into a separate zone. If we're breaking down below these levels also, it's very similar to the S&P. I'd be happy to start looking for weakness, because potentially we're then seeing the short-term end to the upward trend and a correction coming into the market. So I'll be happy to look for sell positions for either of these areas if we start to break down below them. We then have more minor support at around about 6620 down into 6,600 right here. So again, it's taking into account the round number. You can see the test here, the spike down here, and this is why it's important to have the cushion once again, because if you just had the 6,600 level exactly on your chart, you would have missed out on the spike down and then the very strong move back up. But we've had the spike down. I'm tested into this level. It's given us a little bit of a clue. For me, this is more minor. However, if I was selling into this level and it came down, I'd be watching here as a potential area for support against the trade. And if we start to break down below that level, really it's coming into the trend line, and then we're all the way back down toward previous structure at 6,530 to there you go, round number again, basically 6,500. Right here. Those are the main areas for me next week, guys. As I mentioned, pullbacks, buying into the pullbacks continues to make sense. When you're in an upward trend, it always makes sense. I am willing to look up at the 6,800 area. Round numbers, as you can see, just looking at this chart, the 6,600, we've had reactions. The 6,500, we had a much stronger reaction. So coming up into 6,800, definitely worthwhile watching for the resistance. If we start to break down below these levels, I'm happy to look for potential resistance, because it's giving us a potential sign of the correction coming into the market. More minor level here. If I'm selling from here, really I'd start to expect the move down toward the trend line and potentially all the way back down toward previous structure. Okay guys, that's everything for this week. As always, I hope that was helpful. Hope you all have a good trading week next week. I'm James Orr, and thank you.